Hello everyone, this is Muffy Lifestyle and Investment Advice. Today we are going to have a look at Barrick Gold Corporation. Before we dive into the presentation, a disclaimer. We are not registered financial advisors. The opinions are just our own views, and investment decisions should not be made based on these opinions. Please consult a registered financial advisor before investing. Barrick Gold is one of the top gold and copper companies. It has a market cap of $25 billion and operates 13 gold mines and 3 copper mines. Unlike many gold mining companies, it is free cash flow positive. Between 2023 and 2030, they are expected to increase gold and copper production by 30%. The chief executive officer is Mark Bristow, and he has a reputation of operating in unfavorable jurisdictions. They replaced 109% of gold that they mined and 124% of copper mined. Strong free cash flow at $646 million, and capital expenditures are stable. The price of gold ranged from $1,800 to $2,000 in 2023. All-in sustaining cost for gold is $1,364, and all-in sustaining cost for copper is $3.12. Considering current price of gold and copper, this is very good. Looking at their balance sheet, their net debt is $578 million, which for a company with a market cap of $25 billion is very reasonable. Now let's look at the share price of Barrick Gold. Please remember that Barrick Gold is listed in both New York and Toronto Stock Exchange. This is the chart on NYSE. As we can see, even though the gold price has increased, the stock price has fallen and is at a discount valuation. Let's look at the gold price outlook. It is generally positive, underpinned by central bank buying, weakening US dollar, rising government debt. This is an incentive for governments to keep interest rate below the inflation rate. Also, gold will be supported by rising geopolitical tensions. Year-to-date central bank activity remains broad-based, with purchases heavily outweighing sales. The US government debt has been rising exponentially, as you can see from the chart, and it is the same with most countries' government debt in the world. The purchasing power of the US dollar is falling over the last 100 years, and as gold is valued in US dollars, we can expect continued upward movement in the price of gold. This chart shows relationship of gold with 10-year Treasury yield. As you can see, whenever the yield of the 10-year Treasury falls, we get big movements in the opposite direction in the price of gold. Economists are expecting that the central banks will cut interest rates in the coming months. The global copper market is expected to be in surplus until 2026. However, after 2026, due to use of copper in clean energy projects and increased economic growth in India and other developing countries, we can expect supply deficits, which will underpin the price of copper from 2026 onwards. India has now replaced China as the most populous country and is expected to have sustained economic growth. The chart shows Indian imports of copper, which has more than doubled from 2011. Considering all the above, we think that Barrick Gold is a good investment at current price of $14.71. Reasons for this is that the outlook for gold is very positive, and although the near-term outlook for copper is not very good, the long-term outlook is still good. Barrick Gold has an excellent balance sheet, and its cash flow will likely increase with increasing prices of gold and copper. It currently yields 2.71%. We should not assume anything. What are the risks to this analysis? Our assumptions could be wrong and gold price might fall, in which case the profits might fall. Barrick also operates in some unfavorable jurisdictions and might encounter problems, especially in Mali. We hope that you liked this analysis, and if you did, please like and subscribe for more of these analysis.